So we've been talking a lot about US policy. He's certainly not worried that the Fed is behind the curve. He agrees that we're in a transitory phase for inflation and things will calm down a bit. But he actually welcomes, perhaps a bit more inflation coming into the system, a little bit of a tighter market. So let's listen to Joe Stiglitz, and then you and I can do a bit of analysis on the comments from the Nobel laureate, famed author, and former member, of course, of the Council of Economic Advisors to Bill Clinton.
It's not the inflation. Very strongly believe that a tight labor market is really good for our society, for our economy. So that you're absolutely right. I'm welcoming this tight labor market. The only time the United States has succeeded in including marginalized groups into the labor force, reducing inequality, is when we have a very tight labor market. So I welcome this situation, and I'm 100% in agreement with the diagnosis of the Fed that most of what we are seeing are the hiccups of restarting an economy that had to shut down because of COVID-19.
But the Fed's not behind the curve.
No, I don't think it's behind the curve.
Even with trillions of dollars coming from the Biden administration.
I don't think it's behind the curve. In fact, we are at I don't want to say perilous, but that's to the injection of support that was part of what was called the Recovery Act is coming to an end. And
well, you say that. It could take a good year to taper a lot of that that quantitative easing.
No, I'm talking about the fiscal support is coming to an end, and I'm firmly the belief that it's the fiscal support that's made the most difference.
And just on that monetary support that I mentioned then, that's creating dangerous bubbles, isn't it? I mean, given the amount of risk taking and the leverage being built up by corporates and the heady days where we get records on the major US indices every day, have we got a bubble building here, Joe?
Well, one of the reasons I welcome the kind of recovery, infrastructure investment and so forth, is that moves us out of this world of zero interest rates, that it encourages the Fed to start raising interest rates. It is a distorted capital market where the price of capital is zero. It distorts risk-taking. It creates bubbles. And so, to me, it would actually be a good move, have a tighter labor market and a restoration of interest rates to more normal levels. It's a dozen years since we've had zero interest rates.
A whole lot of traders have never seen a rate hike.
This is not, this is not sustainable. And the old expression goes, something that's not sustainable won't be sustained.